Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Now, it is challenging for me today because if you're listening to us on the live broadcast or on ABC News and Talk, it's Monday morning and it's National Cocktail Day. Now, that's not bad because I think that cocktails are probably good for any day that ends in Y. But here's the other part of it. It's also National Cheese Steak Day and Chocolate Covered Raisin Day. So where do we go with all of these good things? I don't know which one to select. Which one are we going to sell? Maybe we can celebrate all of them. But hey, you know something? Before we get into our intriguing content today, please join me in welcoming our featured guest, not giving us any legal advice, but he is one of my favorite attorneys around. Rob Von Esch is with us. Good morning, Rob.
How you doing? Thanks for having me.
Glad to have you with us. Rob comes in on an irregular basis, but helps us out. But he helps us out, and the listeners of Ron Siegel Radio, he helps out on a very, very regular basis. He is one of the first people we think of anytime it comes to sending somebody for legal advice, especially in the world of real estate and family law. Their practice does all of these things. But I do remind everyone when we bring on some of the highly educated individuals with all those credentials behind their name, that we're not giving the professional advice. We're educating today. So if you want legal advice, Rob is happy to provide that, or at least chat with you about it at his office. You just have to call and make an appointment and see if it's a good fit. But we're not doing legal advice today. But let's take a look at the markets before we get into our intriguing content. Dow Jones Industrial Average, holy cow, it's up 584 points. The S&P 500 is up 98. The NASDAQ is up 381. Oil's up 85 cents a barrel. I guess the markets are liking what's going on now a little bit. 10-year Treasury, though, that one's up 7 basis points, 433. We're not a big fan of that, but I'm going to tell you today, no one else is going to tell you this. And I challenge you to let me know if anybody has ever said this to you. I'm going to tell you today how you could lower your mortgage rate by 1.5% starting today, the effective rate, lower it by 1.5%, no documentation, no appraisal, no questions asked. It's all up to you. You get to make the call. If you want that done starting today, I'm going to show you exactly how to do it. And again, no one can say yes or no to you. It's all up to you. So we're going to talk about that. We got a lot of other things going on, but when you look at the markets and we see that the 10-year Treasury is going up, a lot of people are really worried about that because they're saying, well, how am I going to be able to afford a house? Well, it's all has to do with liability management. And that's the issue that so few people ever understand. They look in, they call and they talk to a financial advisor. And when they talk to these financial advisors, they forget what I call, and there's only about 500 of us in the entire country that focus on liability management. But if you're an accounting individual, if you got an accounting degree, if you studied accounting, you've always heard that the balance sheet has the asset column and the liability column. So you've got basically two columns on a balance sheet. As a liability advisor, we talk about a three-sided balance sheet because the asset guys never talk about the big, or rarely, I shouldn't say never, rarely talk about your biggest asset. The liability guys, well, all they want to do is do a mortgage and say, see you later, and see if you qualify. The mortgage people look at one word, eligibility. And we talk about eligibility, of course, but how about suitability? Don't hear that one. And the third side of the balance sheet is exactly where we focus a lot on real estate, on the real estate asset, the house or building or whatever it is, and the liability. That would be the mortgage that's on that associated property. So the bottom line here is we like to talk about that and show you ways, how do you save money? And very few people ever want to get involved in that part of it. Why? Well, because it's simple the other way. When a mortgage person says to you, like I just did, that I'm going to show you how to reduce your interest rate by 1.5% today, and you don't have to do any kind of a loan, you don't have to refinance or any of that stuff, you don't make any money on that. So why would they tell you how to do it? Well, we do that. We've also shared with you many times, and it is my favorite loan in the market. It should be yours, but you probably have never heard of this one either. The Home Select loan. Because it challenges everything you've ever heard about mortgages. So the biggest question as a liability advisor and a mortgage team we get, what's the interest rate? So what if I told you that the highest interest rate product I have, the highest cost product I have, saves you more money than anything else we can do? Saves you money on the higher interest rate? How does that work? Well, it's all about the process and understanding. GetHomeselect.com, GetHomeselect.com. We'll actually show you exactly how to do it, but you got to make sure you understand there's so many laws that are always changing that it's hard for any lay person to figure out how to get to follow all these laws. So that's why we are fortunate enough to have Rob Von Esch to come in and share with us on various times what the new laws and things are that we have to worry about when it comes to real estate. How do we deal with real estate in the current environment? We're going to chat about all that and more. So when we come back, we're going to talk with Rob. We're going to get our education. We're going to talk about lowering your interest rate. And I know that we're also going to chat about 4 things to expect from the spring housing market. We'll be back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They just tell us the number you put in to your mortgage calculator to find out exactly what your principal and interest payment will be. If you don't have a mortgage calculator, shame on you. It's available for free. rsrlinks.com/mobile app. Rates Friday, conventional 30-year fixed down 6.569, jumbo 30-year fixed up 6.856, FHA 30-year fixed up 6.421, VA 30-year fixed up 6.134, and the USDA, that was down 30-year fixed 6.31. That's the rural areas. Generally no down payment if you want our thoughts about the market each and every business day morning. As early as the data allows, we do put that out for you. All you have to do is sign up for the free email, rsrlinks.com/market minute, rsrlinks.com/market minute. Let's see what the markets are doing this morning. So we do have, I had it here somewhere in front of me. We've got the 10-year treasury. It's not showing up on my screen. Let's try a different screen. See if we can get that quicker. 10-year treasury is up about 7 basis points, 4.32. We've got the mortgage bond. That one is down a bit. Remember when the bond goes down, the rates go up. That's not pleasant. And we're looking at what's driving these things right now. So it's a risk on trade happening on the market where money is coming out of the bond market and the risk on assets like stocks and crypto. Reason being, there are some new insights on the April 2nd reciprocal tariffs, and the scope is less than feared. Doesn't that surprise you that we're hearing that? I mean, so far, every single time the president has talked about tariffs, they haven't come about quite as significantly.
Surprise, surprise, surprise.
Administration has set a deadline of April 2nd. Reciprocal tariffs would be put into place to equalize U.S. tariffs with tariffs of trading partners, as well as tariffs on sectors like automobiles, pharmaceuticals, and semiconductors. Trump said he'd be flexible on the launch. Does that surprise you? Those sector-specific tariffs, which may not be announced on April 2nd, though the reciprocal tariffs are still expected to be announced. Additionally, the reciprocal action now looks to be more targeted than originally thought. The administration is now focusing on applying tariffs to about 15% of the nations with persistent trade imbalances with the U.S., which accounts for most of our foreign trade. While it still accounts for most of our trade, it's a narrower approach than many anticipated and some speculated. We could see tariffs on over 200 countries. On Friday, we heard from Chicago Fed President Austin Goolsbee, a voting member of the Fed this year. He was asked which part of the Fed's dual mandate was more important, stable prices or maximum employment. His answer was very clear, which is a surprise coming from anybody in the Fed. They're both important, but it depends on which is more out of balance. If inflation were too high, they would have to likely cut. But if the labor markets were too weak, they would have to cut. Okay. Doesn't make much sense there, but we'll see where Goolsbee goes. You followed him for a long time. He does usually have some pretty interesting stuff. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So let us bring in our friend Rob Von Esch. We're going to chat this morning. What's going on, Rob? With there's probably no new laws going in. We're in California, so we don't like new laws and regulations here, do we?
Yeah, we're not a very regulated state here in California. Yeah, right.
Oh, geez. Okay,
Well-
so what do you got for us today?
Well, I wanted to talk to the audience about a couple of things that I see going on in the real estate market as far as how laws are impacting, I think, financial viability of certain real estate investments. And a couple of years ago, there was this law that was implemented, and everybody was just kind of generally referring to it as the balcony law. And this law requires apartment buildings and condominium developments that have exterior balconies and staircases that are made out of wood and above 6 feet in height to all be inspected by January 1st, 2025. Well, there was a recent amendment to the health and safety code that was imposing that requirement that gave apartment buildings an extension until January 1st of 2026. So they basically got a 1-year extension to comply. But for condos, the deadline still remains January 1st, 2025. So that's already passed. So apartment buildings get an extra year till 2026. Condos, your deadline still remains January 1st, 2025.
You're either in compliance or you're out.
Right. And basically, you have to have a structural engineer come in and evaluate all of this stuff and determine whether it's structurally sound. And it's becoming a big issue because, one, if you're in an apartment building setting, it could actually be difficult to get the study done, which is why they got an extra year. You have a bunch of tenants that you have to coordinate with to be able to get access to some of these things. So it could be a big thing. Like I've actually seen situations where landlords are having to serve 3-day notices on their tenants just to get their tenants to comply with this survey that they have to do. I mean, there's evictions.
What is a 3-day notice? Explain that a little bit, Rob.
3-day notice is something a landlord gives to a tenant saying, look, I've already told you in writing that I need to inspect your balcony, for example. You're not making it available for inspection. You're not returning my calls. You're not coordinating with my inspector. I'm giving you 3 days to comply. And if you don't, I'm going to evict you. Becomes the basis of an eviction. It's essentially a 3-day notice to perform or quit. So if you don't allow the landlord to have access, evictions move forward. And I've actually seen this happening. I'm involved in representing landlords that have had to do this. And it's just very difficult to coordinate with some tenants to do this stuff. I mean, many of them, most tenants are very helpful and are making their units available. But when you get into, apartment buildings, you've got all kinds of people, all kinds of walks of life, and all kinds of personalities you have to deal with. And sometimes it's difficult to get some of them to comply.
So how does that work then when you go dealing with something like Los Angeles, where, I mean, the tenants can do anything they want to, even not pay rent, and you can't evict them.
Right.
But, here's another law that says, well, you better do this, and you can't. How do you balance those two?
Well, it gets tough. And, my opinion is if you've given the tenant, written notice in advance that, hey, we need to do this. And then I always like giving another written notice saying, hey, we're trying to do this inspection and you're not complying here, call us so we can coordinate a date. We've got a deadline to do this as a matter of law. We've got a deadline we have to comply with. And then if they haven't done that, then serve the 3-day notice and eviction proceedings can move forward based on that. And it's a difficult thing because evictions these days are not cheap. When you have tenants that are difficult, they ask for a jury trial when you're doing an eviction. You have a right to do that. But I mean, that complicates things. Now, all of a sudden, that 30-minute to 1 hour trial, because a typical eviction trial in front of a judge is 30 minutes to an hour. But when you're asking for a jury trial, it's a whole different thing. I mean, it takes, the better part of a day to pick a jury. And then you have to prepare jury instructions. And there's all kinds of pre-trial motions about what evidence a jury gets to see. And a jury trial can take a couple of days. It's just way more complicated and expensive. And when you have tenants out there that are trying to game the system and make it very difficult for the landlord to remove them, it's a tough thing for a landlord because it gets expensive, it gets time consuming.
I want to go off the legal side and get your opinion. And again, Rob's giving us opinions and education. It's not legal advice. A lot of laws make sense. Some of them are pretty stupid. I just call it the way it is, right? Is the foundation of this law logical?
Well,
is it going to serve a purpose, or is it just
I'll tell you
one-sided?
why. I'll tell you why it's here. Let's say maybe 5-6 years ago or so, there was an apartment building in Berkeley up by the college. So a bunch of college students were renting this unit. And it was, really a college kid apartment complex, but the balcony collapsed.
Oh, okay.
And a bunch of kids died and got seriously injured. And it was a huge deal. I mean, it was all over the news.
Sure.
I even saw it on things like Fox News. So, I mean, it was nationwide news and certainly big news in the state of California. So the state legislature got together and decided, hey, we need to do a law to prevent these kinds of things from happening, to protect renters and even homeowners, really, because condos are affected by this.
Sure.
And they're homeowners. We need to protect them. So this law was then written up and implemented as a result of that balcony collapse in Berkeley.
So it makes a lot of sense then.
It does, but it causes a lot of headaches because
Unintended consequences from our legal system,
Right.
from our legislators.
right. If you have the apartment buildings, it could be very difficult to get a full inspection completed, which is why they're getting an extension. And it can be very expensive when you have to deal with uncooperative tenants. And then on top of that, you still have whatever the cost of repair is. I mean, if you think about an apartment building that might be, let's say you're trying to buy an apartment building, and let's say it's something in the LA area. Well, chances are that apartment building that's for sale was built in the 70s or the 80s. And so now you're looking at a stair system or a balcony system that is 50, maybe 60 years old.
Sure. So you may have some dry rot or something
That's
in there.
right. You might have termite damage. You might have dry rot. So you could have a lot of very expensive repairs that arise out of that. And I was talking about complications with tenants in just getting the inspection performed. Imagine the complications with tenants you might face when you now have to make significant repairs. You're talking about having to perhaps evict some of the tenants or at least displace them and then compensate them for that displacement while these repairs are being made.
Sure.
I mean, if you're taking away the stairs that they use to go up to their front door, obviously they can't live there.
Right.
If you're taking away a balcony, that could be a safety issue while that's being replaced. So there's all kinds of unassociated, really unconsidered costs. Not unassociated, they're very associated costs, but unconsidered costs that go along with the implementation of this law. I mean, it's very difficult to coordinate all of this with tenants when you have to actually get your report, see what the report's going to require you to fix, and then actually do it, and then get all of these tenants to cooperate with it. It's a very
permits and financing and all that, right? And the inflation cost of materials, the whole bit is
certainly, and you're having to do it now too, at the same time that we've just had all these major fires. And so all of those repairs are
Sure.
beginning to take place. So materials are already kind of being priced up, right? Because of demand.
supply and demand. Absolutely.
Contractors,
Contractors.
You got it. Labor is going up. So it's a very difficult thing for apartment building owners. And it's also difficult for condos. And condos have to do the same stuff. And even though their deadline has already expired, there are still a lot of condos out there that have not complied with this deadline. And
I wonder if it's something that they have to deal with if there's going to be a disclosure if a property tries to get a condo's attempted to be sold, if it does or doesn't have this
you're hitting
certification
the nail on the head. You're hitting the nail on the head because earlier you had said something about eligibility for
Right.
qualifying for a loan. Well, you know what? I think what I'm talking about really falls into the category of eligibility because I've seen this now. I talk to lenders all the time as I get a lot of referrals from lenders and real estate
Sure.
professionals. And I'm beginning to hear that they've gotten a loan almost to the finish line, right? It was approved. It's gone through underwriting, at least the bulk of it, as far as does the borrower qualify standpoint.
Right.
But then you get to the end and the lender says, oh, hey, one more thing. Has this property undergone this staircase and balcony assessment? And if so, what are the results? And I've now been hearing stories of two scenarios. One is it hasn't undergone it at all, in which case the lender is saying, well, we're not going to lend until you show us what the study results are. Or two, it has undergone the study and it turns out there's going to have to be comprehensive and very expensive repairs made to many, if not all, of the staircases and balconies in a particular project. So,
Wow.
I mean, Then
Throw
what
that on
happens?
top of all the increased costs of insurance, and you're going to start seeing a lot of homeowners association problems.
Well,
We're going to come back and talk more with Rob Von Esch about this. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. How do you lower your interest rate by 1.5%, the effective rate? Not the note. I can't change your note, but I can help you with the effective rate. We're going to talk about that when we come back. You're listening to Ron Siegel Radio, discussing real estate, current events, financial markets. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. I can see the direction we're already going, Josh. We're going to do a little bit of a curveball here, and I'm going to do a Borrow Smart segment. And we're going to talk on the Borrow Smart segment, how do you lower your interest rate? Because you want to. You have that opportunity. Now, it's not the note rate. I can't help you with the note rate, but I can tell you exactly how to deal with the effective interest rate. That's the key thing here. So you have to understand, how do you get an interest rate? Or what part of the component does the interest rate play? So if you have any formula, any mathematic problem, if you say 1 + 1 is 2, and you say, okay, 1 + what is equal to 2, you can just figure out you got a missing component. Now, okay, that would be a 1. Very simple. Well, when you're dealing with interest, it's no different. It's just a little more complex. So if I say I've got a $600,000 loan and a 6.5% interest and a 30-year term, I know that what the payment's going to be. It's $38.91.59. That's going to be principal and interest. Very simple. Take any number out of there. You solve for a missing number, and it's all you have to do. So if you go and you have that $600,000 loan at a 6.75% interest rate for a 30-year loan, $38.91.59 is the monthly payment, and you're going to spend $800,000 on interest, $800,971 to be more precise. Now, you say, oh, Ron, I don't like that interest rate. I want to have a lower interest rate. Okay, what do you want? Let's say 5.25. Okay, well, my math isn't real good, but I can do 5.24. Close enough, right? Pay an extra $300 a month, and you've got a 5.24% effective interest rate. Now, what does that do? Okay, we just took our payment to $41.91.59, and we just saved $178,667 in interest. But more. Your loan's also going to be paid off in 24.3 years. So we've effectively changed your interest rate from a 6.75 to a 5.24. You make the decision. Now, you say, well, Ron, it's $300 a month. And I said, well, yeah, that's true. But what would it cost you to do a refinance? And don't tell me my lender's going to do it for free, because there's no free lunch. They're just building it in somewhere else. It's within the interest rate or somewhere else it's built in. Because the title company doesn't work for free. The appraisers don't work for free. The processors don't work for free. The lender doesn't work for free. So it's not free. It's just built in somewhere else. But I just showed you how you can make this change today. $300 a month. Now, is it the $300 for every loan to do that? No. Everyone's going to be a little bit different, but I can tell you that we have a calculator that does show us these numbers, and you can see how quickly I'm able to do that. Now, what if you want to save more money than that? What if you want to go down to a straight 5% interest rate? Okay, well, if you want to get a 5% interest rate, you just go to like $400 a month, and that gets you 4.9, and you're paid off in 23 years. Very simple. It's just mathematics. And then when interest rates come down, and they always go in cycles, so they were in an up cycle. When they start coming back down, then you can say, okay, do I want to do this on a long-term basis, or do I want to do it on a short-term basis? That's the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com. Continuing our conversation, Rob Von Esch is with us, and I say this in every segment just so that we keep things kosher. Rob's an attorney coming in here sharing information with us, not legal advice. If you want legal advice, give me a call at 800-306-1990. I know where to find Rob, and I can introduce you. So let's get back to our conversation, Rob. We got that balcony law. It's that was interesting when you start thinking. I guess when they put these laws in place and they set the deadlines for them, there's no way that they could possibly have figured out that, the beginning of January, we're going to have this major fire catastrophe. And, and what we're going to happen later in January when we start seeing some of the different battles through the administration and costs of lumber and whatnot going up. But it's going to have a major impact. And what's the penalty for the landlord that doesn't comply? Did they build that into the law?
Well, that's a good question. I think as far as the condominium association situation, I think the way the penalty is going to work is what is going to end up happening is once you have unit owners that are potentially unable to sell their units because lenders won't lend because this is not done, you're going to see unit owners suing their homeowners associations to force compliance.
Yeah.
So then you start getting into, like any lawsuit, well, what are the attorney's fees associated with that, right? Because a lot of these lawsuits, you can recover attorney's fees when you're in a homeowners association. And then two is, well, what kind of damages have the unit owners incurred or sustained because the law hasn't been complied with in a timely fashion? And if you have a bunch of units that can't be sold, then all those unit owners are going to say, hey, you're damaging us, homeowners association, to the tune of X amount of dollars. There's a way to calculate what that loss is by not being able to sell your home. It definitely is a calculable number. So there is, in the association context or condo context, kind of the way you're going to see it enforced is eventually it's going to be the homeowners that are going to begin to demand that it's complied with so that they can sell their units. And in the apartment context, you're going to eventually get tenants who already scrutinize landlords in our state very thoroughly, and they're very critical of how the landlords take care of the property. And you're going to start seeing tenants saying, well, hey, wait a minute. Have you inspected my balcony? Have you inspected my staircase? No. Well, I'm going to sue you. So it's kind of almost funny for me in the landlord context, because it seems like it's damned if you do and damned if you don't. You're going to have these tenants that are going to make it difficult for you to comply because it disrupts their lives. And then you're going to have this other batch of tenants who are going to then sue landlords saying you haven't done this fast enough. So it's a very difficult situation. And when I say difficult from a lawyer, to me, what that means is expensive.
Sure.
Because all these problems are going to cost landlords money. It's just a very difficult situation to be in. And the reason I'm bringing this up is because if you're getting ready to buy or sell a condo, for example, or even an apartment building, these are probably things you should be looking into. Has this been done already? Has this requirement been fulfilled? Because if it hasn't, there is in my mind, a tremendous negotiating opportunity for a buyer of any of these places, assuming that any lender is even going to lend on this, right? Because that's the first thing. Because if a lender's not going to lend, then obviously the price is going to be much lower.
Right.
But if a lender
you can only go to the cash buyer then who says, I'm willing to take that risk, and then I'll make sure it happens on my own.
That's right. Yeah. So there's obviously going to be a dramatic reduction in price for that type of a buyer. But assuming a lender will lend, then the next question you're going to be asking is, okay, what's it ultimately going to cost for me to do this? And I think if you're in the context of a rental property or an apartment building, it's going to be whatever the cost to get the study is. Let's just call that between $5,000 and $30,000, depending on the size of the project, how many units.
I was going to say, that's probably per unit, not even per project, right? Because if you've got, we do a lot of stuff out in the Coachella Valley, and you've got some projects out there that are 300 and 400 units.
Absolutely, Ron.
It's going to be massive.
That's a massive thing. If you're looking at something that big, that's a much bigger expense. So, but that's just the beginning. The study is just the first step. Then the second step is, what does it actually cost to fix it? Now you're getting into a situation where it could be hundreds of thousands, if not millions of dollars. So there's a lot of variables that any purchaser of these properties or seller or owner really should be thinking about, because it impacts the value of the property that's going to transact.
That's amazing. And
these are all things. And not only is it just the cost of the study, the cost of repair, but then it's the cost of dealing with tenants if you're going to have to deal with that too. And a lot of people overlook that. So there's a lot of things that impact the price associated with this new law.
Yeah, that just goes with the typical Sacramento stuff. I think most of them have good intentions, but sometimes the execution is a bit of a problem. And the unintended consequences.
Sure. And a lot of these people that are making these laws have no clue of what they're really doing. A lot of them are not landlords and don't understand this. And a lot of them don't understand how this plays out in reality when you've got lenders, tenants, and you actually have to get a lender to perhaps overlook that this hasn't been done. And what does that do to anybody's ability to sell? You're now locked in and frozen unless you find a cash buyer. Or you've got to deal with tenants and have them cooperate with this law that you're imposing on a landlord. It's way more complicated than these lawmakers have ever even thought through when they decided to put these laws in place.
Well, and even worse is what happens if you buy the property and you have you got a loan, and you get down the road and someone gets hurt and you didn't get this done. Now you've got negligence on top of somebody getting hurt, which is really bad.
You have
that compounding.
Absolutely, Ron. Or what about if you bought a property and the lender did not think about this balcony law compliance issue? And let's say, for example, specifically, you're in a condo. Now you're the owner. And let's say 6 months to a year later, you get a notice from your homeowners association, hey, we're going to specially assess each unit owner $30,000. Could be a bigger number.
Which is not out of the norm.
That's right. That's right. So now all of a sudden, you just got into your condo, you're a new homeowner, and now you got to come up with an extra $30K on top of that. And this is the stuff that happens.
Wow. Ooh, that's a bright way to start. I think aren't we glad it's National Cocktail Day? Well, you listen to some of these things. We're going to continue. Maybe we got a better one from Rob when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Hey, since we got so much intriguing conversation from Rob Von Asch, we're going to skip our real-time real estate segment today and get back into our conversation. Attorney Rob Von Asch is with us, not giving legal advice. He is sharing with us educational information, maybe. And here's one that you don't usually hear from attorneys. So Rob's actually giving us advice that might keep us away from having to go visit the attorney, which is great because Rob does that all the time. So we appreciate you, Rob. What else do you have for us that's new this year?
Well, I just wanted to continue on with this just a little bit further. And so I just want to, make sure the audience understands I'm not telling anybody this for doom and gloom and everything else. I'm trying to educate you so that you can hopefully use this information in a positive way. Know upfront what the status is with this balcony law compliance so that you can negotiate a price that factors in this potential risk. And, the other thing I was going to say too is in line with the balcony and staircase, study and, structural integrity law that I just went through. If you're buying a condo, you should also be looking at the reserves. And a lot of people overlook this. I cannot tell you how many times I've seen buyers just completely look at me with a blank look when I'm talking about the reserves. And about every 3 years, a condo development has to have a reserve study done, which means they have to assess the useful life of all of the things that the association is required to care for: the roof, the siding, certain plumbing, the foundation, whatever it is this association is required to care for. It's called the common area. That's what the association has to take care of. You need to see a reserve study so that you can see, has the association actually adequately funded their reserve? Because if the project is 40 or 50 years old, and ladies and gentlemen, most of the condos now in our state are beginning to be about that age.
Yeah.
If they're 40 or 50 years old and major upgrades have not been made to these old roof systems, plumbing systems, electrical systems, and so forth, guess what? They're in need of replacement. They're right there at that point in time in their useful life, which means you're going to have to do expensive renovations to the project. And what happens is if the association has not adequately increased their monthly HOA dues over the many years that they've been funding their reserve, chances are that reserve's underfunded. So what that means is, again, you're going to be getting another special assessment. So it's not only a special assessment potentially for the balcony and the staircase, it's a special assessment for all of these other things that now have to be fixed, and the reserves are underfunded. So you're going to be getting an assessment for $70,000.
How do we know what the reserve should be? If it's underfunded, overfunded, how would we know that? Does it say that on the HOA documents?
Good question. The reserve study is going to tell you that.
Oh, okay.
So you need to look at the reserve study. That's the whole point, is it tells you what the useful life is and what the likely replacement cost is at a certain point in time. And the reserves are supposed to be funded to keep the budget or the reserve amount in line. It's like a savings account.
Okay.
So
it's like our emergency fund. That way we're saving,
right.
We're saving for something that we know it's going to happen. We just don't know when.
That's true. And so, but the problem is that some of these associations have, and of course, naturally are very resistant to raising their monthly dues. So you've got some of these associations that have dues that are still in the $300 to $400 a month range. And it's, like, guys, I hate to tell you, but the cost of actually fixing this stuff is way more than, what could be saved for $300 to $400 a month, plus maintaining all of the other operational costs
and dealing
of the
with
project.
And obviously the biggie in California is also the HOAs all have to deal with insurance.
That's right. Insurance, whatever the labor costs are just to have the pool cleaned, the grounds kept up, slurry seal on the streets, whatever. So you have to raise dues, and a lot of these complexes have not. So the reserves are grossly underfunded. So again, what I would also encourage any potential buyer or seller of a condominium to do is to look at these reserves, because again, This gives you very valuable information about what the real value of the property is that is often overlooked.
Well, that makes, the whole idea here, I think you hit it on the head, Rob, is that it's not a matter of you're saying buy it or don't buy it. Just buy with knowledge.
That's right.
Right. Go into it with your eyes open. And, we talk always whenever we're talking about anything to do with our real estate and the liabilities, safety, liquidity, and return. Well, if we have to deal with an underfunded association, that's going to have an effect on our return.
Right.
And it's also going to have an effect on our liquidity, because if they come after us and say, hey, I want another 10,000, and that's not an abnormal number.
Right.
Right. Saying we have an assessment for 10,000. We might give you a year or 2 years to pay it, but pony up.
Right. And just so you know, if you can't pay it, if you are an owner of one of these condo units, then what happens is they impose a lien against your condo for the amount of the assessment, and they foreclose. That does happen. And
wow,
condo complexes are fairly aggressive foreclosers, in my opinion. So yeah, if you don't pay the assessment, you're going to get eventually a foreclosure action against you, and your house will be sold to pay that lien. So, I mean, it's just understand all of this going in. Again, I'm not trying to freak people out. I'm just trying to give you food for thought so you can better assess what the value of something really is.
Make an informed decision.
That's right.
It's amazing all the things that go in and they're behind the scenes. Rob, how does somebody, just the lay person that's not listening to Ron Siegel Radio, and you should be, but that they're not listening, how do you find out about some of these? Do you guys put out a newsletter or something like that has this information? Or
no, I just try to, do educational things like this,
public speaking.
That's right. Yeah. This is how I get the word out. But yeah, you're not going to be able to find it on my website. I just don't do that. Sorry, everybody. But, I do try to do these sorts of engagements as much as I can to get the word out. And now, and knowledge is power.
So we got about a minute left. Tell us a little bit about your firm.
Well, my firm is in Fullerton, California. It has 5 lawyers, 4 support staff on top of that. And we have a family law department that does all divorce and that kind of stuff. And then we have the real estate and business department, which is headed by myself. So we represent a lot of people that are in real estate fights, whether it's disclosure or anything else, landlord-tenant issues. And I have a lot of business stuff that I do, partnership disputes, contract fights, or even preparing and negotiating contracts. So a lot of that stuff is the bulk of what happens in my office.
And I'm going to share that in a lot of instances, by going and talking to somebody like you early, it's a lot cheaper than going to talk to you when it's late.
100%.
Right?
100%. I can't tell you how many times I've looked at somebody and said, if you had come to see me before you did the deal, we wouldn't even be sitting here now. Because
there's preparation stuff. And I can also say I don't even know how many years we've known each other, Rob, but it's been a long time. Every client or family I've ever sent or person I've ever sent to Rob, they've always been very, very excited about the work that you and the firm do. And so if you have information or need information or have things that fit in, give Rob a call or his office a call and get their guidance, get their counsel. And I've shared this many times. My belief is that professional guidance doesn't cost you anything. It'll save you in the long run. So, what's the old story? Pay me now or pay me later.
That's right.
So
the pay me later is usually pay me 5 times later.
Right. Exactly. So if you want to meet Rob, give me a call at 800-306-1990, 800-306-1990. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.